gold is going much, much higher. I used to think, back in 2009, 10, 11, back when they started QE, I was thinking gold would go to like 5,000, when gold was like 1,000. And it didn't get there. But now that it's 2025 and we've created so much more money and so much more debt than we had back then, I mean, 5,000 is nothing at this point. That's just a pit stop on the road to much, much higher prices because we have to, catch up to all the inflation that we've created. So, now you're looking gold could be, 20,000 or more. I don't know. But a lot of it isn't gold going up. It's the dollar going down. The Fed needs to raise rates. That's what they're supposed to do. But they're not going to do that. There's no way they should cut. They never should have cut. They never should have stopped hiking. The Fed never got into restrictive mode. That was a lie because credit continued to grow to record levels in the government, in the private sector. That meant that credit was too loose. The Fed never had tight money. Also, look at the price of gold. When Alan Greenspan was Fed chairman, he said that he used gold as a way to tell whether he was too loose or too tight. And he said that if gold got up near $400 an ounce, that meant that he was too loose. And if it got down near 300, that meant he was too tight. Now, obviously, at the time, it was trading at around 350, right? So he was looking at gold as an indicator of whether or not he had the correct monetary policy. Powell watched gold go from 2,000 to 3,000 and cut rates. What was that telling you? Gold was telling Powell that he was making a mistake, that rates needed to be higher. But the reason he's cutting rates is because we're insolvent and we can't afford higher rates. But so I think the Fed is eventually going to cut rates and go back to QE, but they're waiting for everything to collapse, right? Because they don't even know that it's going to collapse, but they're waiting for some signs that the financial system is buckled. Maybe they want to see big layoffs, which are coming. We're going to have widespread layoffs in the United States because the whole service sector economy is going to shut down because all the imports are going to be cut off. So we got nothing to buy. So, all these businesses are going to be going into bankruptcy and laying people off. But when the Fed cuts and goes back to QE, that sends inflation through the roof. So it's high and it's going to be a lot higher. And then it sends the dollar through the floor. It's actually going to send long-term interest rates higher. So, we're at the end of the road here. No, it is a long-term shift. And it's been going on for a long time. Yeah. How do you think we got up to 3,200 and change? So no, but gold is going much, much higher. I used to think, back in 2009, 10, 11, back when they started QE, I was thinking gold would go to like 5,000, when gold was like 1,000. And it didn't get there. But now that it's 2025 and we've created so much more money and so much more debt than we had back then, I mean, 5,000 is nothing at this point. That's just a pit stop on the road to much, much higher prices because we have to, catch up to all the inflation that we've created. So, now you're looking gold could be, 20,000 or more. I don't know. But a lot of it isn't gold going up. It's the dollar going down. When the United States, was first started in 1789, you only needed $20 to buy an ounce of gold. And about 130 years later, when we established the Federal Reserve in 1913, you still only needed $20 to buy an ounce of gold. So the dollar and gold were very stable up until the creation of the Federal Reserve. Now, that didn't change until 1933 with Roosevelt and the Great Depression, and he devalued. And now you needed $35 to buy an ounce of gold. But that was the same until 1971, $35. And then we went off the gold standard completely, and now gold goes from $35 to over $3,000. So gold has gone up more than 100x, but gold hasn't changed. It's the US dollar that has lost more than 99% of its purchasing power. Yeah. When the dollar was backed by gold, it didn't lose any of its purchasing power. It was only when we went to a fiat system that the purchasing power was destroyed. So when I'm talking about $20,000 gold is not more valuable. The dollar is a lot less valuable. And so you need a lot more dollars to buy that same ounce of gold. Returns that investors will be able to get on global assets. And, people can learn more about that at my website, Europe Pacific Asset Management. I mean, we have all kinds of strategies that have been designed to benefit from de-dollarization and from the process that is now underway. All you have to do is look at what's going on. U.S. stocks are going down. U.S. bonds are going down. The U.S. dollar is going down. It's all being sold, right, and the money is being redeployed elsewhere.
Hey, we talked about repatriation of gold from, Europe and other countries, but do you think that U.S. is going to add to its stockpile? I mean, any news here if we're going to get back to the gold standard?
Well, where are we going to get money to buy gold? We're broke. We're running multi-trillion-dollar deficits. So how are we going to buy gold? Are we going to just go into deeper debt to buy more gold? No. I mean, it's the countries that have surpluses that are buying the gold and basically to sells. And the analyst said the reason we're downgrading is because gold's at 2,000 and we don't see any upside. Everybody thought 2,000 was the top. Yeah. And I kept saying, no, 2,000 is the new floor. And so Wall Street has completely missed the gold trade. They don't have any money in these gold stocks. Again, they bought Bitcoin ETFs and all kinds of crap. Bitcoin, since it peaked in November of 2021, is down more than 30% in relative to gold. MicroStrategy or any of this nonsense. I just came out with a special report. People can get it for free. Even though gold's going to go up, the gold in the ground could go up much more. And then, when you triple, quadruple your money in these gold stocks, which I think you could do very quickly, then take some profits and buy more physical. Yeah. Even if the physical has gone up, it won't go up nearly as much as these stocks. So it's like a once-in-a-lifetime opportunity to take advantage of the fact that everybody's been asleep. The central banks have been buying gold, and they haven't had any competition from private investors. Well, when private investors wake up, especially the endowments and the pension plans and then the hedge funds, when they finally realize that they've got it wrong. Remember, all the experts said that tariffs would make the dollar go up.